The home construction ETF, ticker ITB, climbing more than 50% this year. What a snapback from last year as builders reap the benefits of low existing home sales amid high mortgage rates. Luxury-focused Tri Pointe Homes, among them, shares there up 65% on the year. And while its homes don't come cheap, averaging a little more than $700,000 per delivery, Tri Pointe is seeing increased demand from younger buyers, with two-thirds of its customers being millennials or Gen Z. And incentives like rate buy-downs could be what's helping to get those cohorts into homes. Joining us now for more is Doug Bauer, CEO of Tri Pointe. Doug, welcome and congratulations on the good results. What are you seeing specifically with respect to how rising or high interest rates are affecting the price of transactions? Down a little? Stable? Where?
Well, thanks, Tyler. The impact of higher rates, whether rates are going up or down, and right now the average 30-year fixed mortgage, conventional mortgage rate is about 7%. We have the new home builders have a distinct advantage really over the resale market with plenty of levers to pull. We can offer permanent, temporary buy downs. A majority of our buyers actually do a permanent rate buy down. As a matter of fact, as you look at our fourth quarter deliveries from our mortgage affiliate this year, 86% of our buyers are locked in at 6.6%. We also can use forward commitments, which is really a fancy term of having some mortgage funds available at a nice rate. We actually have a forward at 5.99% for 90 days. So these are the tools that the home builders use in today's environment. And frankly, I saw the CPI print. I'm not an economist, but I think rates are going to stay where they are for the foreseeable future. And it's a good thing for for Tri Pointe and the new home builders.
A forward commitment is not a term I'm familiar with, so I might ask you to linger a little bit and explain what it was. It says is it a 90-day loan? Is that what it is, or what?
Yeah, it's basically securing mortgage funds for homes that would close in the next 90 days. And I can provide you with on a conventional loan of a fixed rate of 5.99%. So it's another financing tool, Tyler, that we use in the new home building industry to attract and get buyers into our homes. By the way, our home buyers typically put down 19%. Their annual incomes are about $187,000. So we deal with a very strong buyer profile here at Tri Pointe.
I can see certainly why the home builders, such as your company, have an advantage over the previously occupied homes, because those folks may have mortgage rates at 3%, 4%. They don't want to sell. They're locked in, like me. Excuse me. And so the new home is really a great option. But I want to come back to my initial question. Are the prices you're able to get today the same as, higher than, a little bit lower than the prices you were commanding for an identical home a year ago?
They're generally a little bit higher, anywhere from 1 to 2 to 3% on, let's say, maybe around 60% of our communities, 70% of our communities. So the prices have trended up, and it's because the fact that you're making. I mean, there's this locked-in effect in the resale market. And as a result, the new home builders have typically about a 10% market share. Right now, we're enjoying about a 30% market share of all home sales. So that locked-in effect reduces supply. And when you reduce supply and demand is there, pricing will hold steady or gently go up. Interest rates, where they are going to keep pricing kind of where it is. We reported incentives of about 3.8% at the end of the third quarter. And so that's kind of a little bit of a governor as far as pricing into the future and as far as where rates go. So I've always said rates affect payment and pricing. It doesn't affect demand. So, if mortgage rates go up to 8%, then we'll have to make those adjustments.